We're going to shift gears, look across the pond very, very far for investing ideas with Mr. Danny Kirsch. He's the head of options at Piper Sandler. He's got his mind on China. Looking at your notes, a lot of China stuff that you're looking at for trades, Danny, but just kind of give me a first thought on what's happening here in the U.S. Last we spoke, you were dabbling in the meme world, looking at Reddit and DJT, coming up with ways to capture vol. Is any of this today signaling we might get back to that kind of frothy, heady type of environment?
It certainly seems like we're in the midst of a big short cover rally. You had I'd say the dovish NFP today, arguably marginally dovish Fed, and they've added back a couple of cuts. It looks like the market now is pricing in a cut by September, and that's what everyone wanted to see. They didn't want to see any more hikes. They definitely wanted to see cuts. They got that today. The data was soft enough that I'd say it gave a lot of relief to anyone who is investing in small cap and investing in more levered stocks, and that's what's happening today. Those levered stocks are getting super well bid. Crowded shorts have been rallying, have been taking off, and I think that all ties in with this rate move, that anything that sort of eases inflation a little bit that might make the Fed consider cutting faster than was previously expected. Clearly, the market likes that, and that's what we're seeing today. Interestingly, I see on this screen you've got the VIX up.
Yeah, down below 14.
Yeah, so this week I think the S&P was up like 40 bips. It feels like it's up a lot more, but it was up because we had the intra-week, we had some sell-offs. It's up about 40 bips this week, but because we got through all of this macro data, you got through the Fed, you got through the payrolls, you got through QRA, got through Apple earnings, all this stuff has passed. Market's basically where it was. Now, looking at the calendar, what's the catalyst going forward? You've got CPI on May 15th, and then you've got Memorial Day, you've got Juneteenth, you've got 4th of July. So I think that there's a chance you actually just end up seeing the year-to-date lows in the VIX in the next couple of weeks, unless we get some sort of surprise, which clearly the market isn't pricing in. The market is just saying, okay, we got through everything, rates are a little bit lower, maybe we dabble on a little more risk, but it's telling you we don't see a lot more volatility going forward. And I think that's probably the right outlook in the near term because of all these calendars and because of like the dearth of macro catalysts.
That's a good point, especially after this week. So much that, the next week looks pretty light. So if we follow through the momentum, to your point, then, coast clear if the weekend trade for this close is as good as it looks right now.
Yeah, and I'd say the big cap tech name that people were worried about was Apple. And,
Agreed.
The guest before me mentioned Apple was fine. Apple looked good enough. It's rallying today. And you had good earnings on Amazon, even like Meta's bounce back. It just seems like the Mag 7 was good enough. Those have been carrying the market. And then May 22nd, you get NVIDIA. But again, that's a long time from now. It's still 3 weeks away. So you could just have this kind of grinding higher market with limited catalysts into CPI and then NVIDIA.
All right, let's go to China because it seems like the confidence is building there. You've got a couple interesting measurements you're watching. I mean, I was just looking at FXI these last couple weeks. I think last week it was like my sleeper story of the week, especially because equities here at home were still kind of struggling. The strength in China looked particularly notable. If the U.S. market bounces back, does that take anything away from China? What are these figures that you're looking at? Because it seems like they're trying to turn a corner.
Yeah, this is just a confidence measure that is sent out monthly. The SMC confidence index is ticking back up. And you mentioned last week, I 100% agree. So last week FXI was up 8-ish%. This week it's up another 5%. I had zero questions about the China breakout last week. No one mentioned it. And I think that's part of the story. To me, the biggest risk and the biggest concern when I look at like an FXI, when I look at some of these emerging market ETFs, even when I look at gold to some extent, is when I see a ton of call buying, stock going up, call open issuance exploding. That to me is like there's a chase. And so if the rally continues, there's overhead supply, right? If everyone's buying calls and they go in the money, everyone becomes a seller of those calls. So that gives me pause. You haven't quite seen that yet. This has sort of been like a stealth rally. I think a lot of people have given up, thrown off the towel in China, and now perhaps confidence is picking up. If you look at a 2-year relative performance of FXI to the S&P, it's flat. S&P is up 25%. Qs are up 35%. So if we're going to get a softer dollar, perhaps a little more investment in China. There's the third plenary conference. It's in July, which a lot of people are talking about to say pro-stimulus, pro-growth measures that China can implement to sort of push this market up. Work with the U.S. a little bit, especially as we approach the U.S. election, and get people reinvesting in China. This could work, and it's been such a dog and such a laggard, and so much money is left that another 20, 30%, that just gets you equal to where the S&P has done the last couple of years. And it's still over a 5-year period. It's not even close. It's been a massive underperformer. So to me, like, there's just no investment there right now. And again, you haven't seen that chase here that you've seen in the past where FXI rallies 3-4% and there's massive call buying and the chase is on. And then once the tide turns, there's all those calls become call buying, becomes call selling, and it just dies out. I haven't seen that yet. And so to me, the next 3 months, that might be an interesting place to look, especially with perhaps the dollar weakening and the Fed, maybe on pause, or maybe a little bit, maybe the market views the data coming forward as a little more dovish, which
that's an interesting nugget.
Which would beneficiary for EM in China.
Yeah, the potential for the dollar to finally, crack a little bit as it has been is sort of a cherry on top. But it seems like even more important, though, is that before that dollar broke, China was firming up. We looked at that small to medium enterprise optimism that's turned around, and the regulatory pressure has softened. I want to bring up a chart that you brought because I'm curious how you measure this and where this comes from, because I feel like that's the main story, is that China was shooting themselves in the foot for so long, and I guess they decided they wanted to start walking again.
Yeah, this is also as of March 3rd, so it's a little bit dated, but this is, and to think with a grain of salt, these China regulatory moves are from the government. So these are data that they publish. Any sort of regulatory moves that we try to keep track of at our eco team keeps track of at Piper Sandler. So they're looking through the monthly reports that the government puts out, saying like how many regulatory, and these are all restrictions. This is not stimulative. Regulatory moves are put in place. And this is a good measure of, are they trying to put the clamps on, or are they trying to loosen up policy to allow maybe stocks to work, maybe soften up, like protect, I guess, a little bit the real estate market, because obviously there's been a ton of softness there. And maybe this is when you see the regulations start declining, that's when the stocks tend to work. And that chart is pretty, it's like inversely correlated with FXI.
Yeah,
and
no.
Regulations come down and with a lag, right? So it's like, that's just telling you we're okay with stocks working for a little bit. We want stocks to work. We want companies to feel like they can raise money, enter the capital markets, and maybe get a little more freedom, and perhaps helps with this like crippling youth unemployment as well, which has been a big issue in China, which could again create this sort of chase, because it is such an underperformer. I think people are dying to buy other things besides the Mag 7.
It's a pretty good 5-day move here for FXI again, especially this week, in terms of describing it as underappreciated or unchased, especially on a week where there's so much here. Easy to miss, another sizable move in FXI, $2 up off the lows. All right, how do you trade it, Danny? What do you see? Options or what? We got about a minute.
It's always options. You know that. We looked at buying August call spreads or July call spreads in FXI to catch that third plenary. Again, this could all unwind, and so we want to limit the loss, but the way you're going to make multiples of your money is spending a little premium, something like the July 29.32 call spread on FXI. I think that's around 70 cents to make $3. Something along those lines that gives you some time for this to continue to play out, gives you a few months. Hopefully the breakout continues. God willing, it happens even faster than we expect. You can roll the call spread up, but that's how I played. Volatility is still much lower than it was, I'd say, a few months ago. It's picked up a little bit, but these options are not expensive. And as we've seen in the past, and this is probably why it's been such like an under-followed and under-loved story, there's been a lot of money lost buying calls and spending premium in China. This is why we'd like to give it some time, look at a call spread, try to let this play out over the next few months, especially with hopefully the dollar continuing to weaken, and make 3, 4, 5 times your money.
All right, love it. Good stuff. Bringing us fresh trade ideas. Good to catch up. Thank you, Mr. Kirsch. Good eyes on FXI. A week we were very domestically focused. Thanks, Danny, head of options at Piper Sandler, right, with the calls in FXI.